What if I told you that the credit score you've been chasing for years, the one that decides if you get a mortgage, a car loan, or a decent credit card, might be about to change forever? And it's not because of something you did, but because of a little-known government agency in Washington, D.C. The Consumer Financial Protection Bureau is pushing to break up the two-company monopoly that controls every single credit score in America. Could your credit score soon become a public utility, like water or electricity? Here's what that means for your wallet in 2026. Right now, 90% of all lending decisions in the United States are based on just two credit scoring models, FICO and VantageScore. That's a duopoly controlled by three major credit bureaus, Experian, Equifax, and TransUnion. But in April 2026, the Consumer Financial Protection Bureau dropped a bombshell. They're actively debating whether to make credit scoring a public utility. Imagine if instead of paying these companies, your credit score was managed by a government-regulated entity aiming for fairness and lower costs. This isn't just policy talk. It could reshape how you borrow money, from credit cards to home loans. So why is this happening? For decades, consumers have complained about errors on credit reports, high costs for monitoring, and a system that seems rigged against them. The CFPB argues that treating credit scores like a public utility, similar to how we regulate electricity or water, could increase transparency, reduce errors, and make scores more accessible. Think about it. If scoring becomes a public service, you might pay less for credit checks, and lenders could have more accurate data. But critics warn it could lead to bureaucracy, slower updates, and even political interference. The debate is heating up in D.C., with financial analysts predicting major shifts by late 2026. Let's break down what this means for you. First, cost. Currently, checking your credit score can cost up to $20 a month through some services. Under a public utility model, that might drop to a few dollars or even become free, funded by taxes or minimal fees. Second, accuracy. With more oversight, errors on your report, which affect 1 in 5 Americans, could be resolved faster. But there's a catch. If the government runs it, updates might be slower. For example, paying off a debt might take weeks to reflect, unlike the near-instant updates from private companies today. Now, how does this affect your ability to get loans? If scoring becomes a public utility, lenders might have access to more standardized, reliable data. That could mean fairer interest rates, especially for people with mid-range scores between 600 and 750. But it might also mean stricter rules. For instance, if the government mandates certain scoring criteria, lenders could become more cautious, potentially making it harder for some to qualify. In 2026, we're seeing proposals that could either loosen credit for millions or tighten it unexpectedly. Here's the real question. Should you change what you're doing right now? The short answer, no, but stay vigilant. Keep paying bills on time, keep credit utilization below 30%, and monitor your reports for errors. These basics will always matter. However, start paying attention to news from the CFPB. If this change happens, it could roll out over the next few years, so being informed will help you adapt. For example, if scores become cheaper to access, you might check them more often to catch issues early. Let's talk about the potential downsides. A public utility model might mean less innovation. Private companies like FICO and VantageScore constantly update their algorithms to better predict risk. If the government takes over, updates could be slower, potentially keeping outdated models in place longer. Also, think about privacy. With more government involvement, there's a risk of data breaches or misuse. On the flip side, proponents argue that regulation could enhance security and prevent the predatory practices seen in some private sectors. So what's the bottom line? The CFPB's push could democratize credit scoring, making it cheaper and fairer for everyday people. But it's a double-edged sword. We might gain transparency and cost savings, but lose some speed and innovation. As of 2026, this is still in debate, with no final decisions. Your best move is to stay informed and keep building good credit habits. Because no matter who controls the scores, the fundamentals, like paying on time and managing debt, will always be key to your financial health. What do you think? Should credit scores be a public utility, or is the current private system better? Drop your opinion in the comments below, and if you found this helpful, Hit like and subscribe for more credit tips in 2026. Thanks for watching.